Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope all of you had a very good day of trading today. And in terms of myself, apologies for no upload last night. Hadn't missed one of those daily market recap videos in approximately 3-4 months at this point in time, guys. So I appreciate all of your understanding. Had a few personal things to take care of, but we're going to do all the catching up today. So in today's markets, guys, we had a lot of push and pull. The focus is going to continuously be on rotation. A lot of the very high-flying names that have been breaking records in the last couple of days have now started the inevitable pullback, and most of those have to do with the risk-on narrative trades that we've been closely monitoring over the past week since the Trump election results have come out and pushed these growth stocks into turbo mode. So in today's video, guys, a lot of things to discuss. Number one, we're going to go over the CPI numbers that came in earlier this morning, see how we still stand on inflation. That was the most important release of the week. So as of now on, it should be fairly smooth sailing. Thereafter, guys, we're going to take a look at our major technical analysis on the major stock market indexes. See how we are shaping up now after 2-3 days of pullback in a row. Is the market still healthy? Is it overbought? We're going to take a look into that. Thereafter, we're going to take a look at our major big tech names as well, see if there's any good dips to be had there as well. And lastly, guys, conclude with a quick glimpse into my portfolio for a few of the trades made today and what I still have in the portfolio remaining for the rest of the week. So a lot to cover in today's video, guys. Let's jump right into the action. So the SPY up only 0.05% and the QQQ's down 0.13. These were pretty much positive for a majority of the day before having a pretty big sell-off here in the end of the afternoon, as we can see right here on the SPY. The QQQ was a little bit more pronounced as well, but overall, no major levels were broken today. Most of the downside, of course, was in the risk-on sector. The IWM Russell losing a key time frame here, setting up the hourly downtrend now into daily consolidation mode. Let's take a look at that rotation, right? This is going to be front and center, guys. So even though a lot of the high-flying names have been coming down, Bitcoin was one of them. Bitcoin was up 5% for a majority of the day before starting to give that all back, starting at the 2 p.m. candle. As you can see, we've now retraced almost the entire 5% move, which does lead us to believe, has Bitcoin potentially reached the peak of the short-term movement? And are we maybe heading into a little bit of daily healthy consolidation? Keyword is healthy. And Bitcoin brought a lot of things down with it as well. Take a look at Coinbase. Coinbase down tremendously, even though Bitcoin was up a majority of the day, Coinbase was coming down. Several of the risk-on sectors as well. ARKK coming down. We just looked at the Russell as well. Other names that have rallied that are not tied into Bitcoin too. Elf Beauty, right? Come up and now just as easily coming down. So many different names today, guys, that were having very good performance have been now coming down. Take a look at Affirm, also starting to do a little bit of retracement here. And the loss leaders of the day, guys, has to go to semiconductors. Semiconductors really underperforming the market ever since those elections about 5-6 trading days ago at this point in time. The rest of the market, though, doing fairly good. Defensives getting some nice rotation. Industrials, real estate, utilities not performing too bad. The banks also up decently. Healthcare holding ground, but not the strongest. Most of the pain here, guys, today was really in semiconductors. They have been the biggest loss leader in terms of the QQQs, and is one of the big reasons that although we've had good performance in big tech names, the semiconductors are really the ones that are holding back the QQQs from having those big 0.5%, 1% day up days rather, right? So rotation still rotation still at a first glance, very, very healthy, but you know, certain sectors do have pain points. So it just goes to reiterate, depending what stocks you own in your portfolio right now, on days like today, you are either red or green. But it's perfectly normal, guys. As long as the rotation remains healthy, we should be just fine. Take a look at the one-day relative. You can see that rotation in action, even better, right? Cyclicals, real estate, energy, defensives, industrials up. And to the downside, communication services, basic materials, healthcare, technology, and financials. On the one-week relative, where do we stand? Well, everything is pretty still fairly in the green. Basic materials, your loss leaders to the downside, healthcare and financials as well. But technology has been holding up fairly well, and even consumer cyclicals getting a little bit of a bounce back from the depths of where they were just a few short months ago. 1 month relative, you can see now, very mixed market, guys. So although we've seen some high-flying stocks do very amazing numbers in the past 5-6 days, we can't really say that the market has been turbocharged mode in every single industry, right? We did a full recap on our sector analysis on the Monday session. And I was telling you guys, it's really not that, it's really not a case of everything moving up at the same time. There's rotation in and out of various sectors on a daily basis, which does lead to some quite confusing analysis depending on which sectors you're choosing to track, right? Sometimes it feels as though the market's not running, but if you're in other high growth names, let's say, you've probably had a very nice past week. And we can take a look at a few different indicators right here. Here's your percentage of stocks above the 50-day moving average. As we can see, we are still healthy at 63%, but we have come down significantly here from the highs reached last Thursday. So we're still relatively healthy in the terms of expanding breadth in the market, but we have seen a big pullback here in the last 4 days of trading. And the same thing goes with the percentage of stocks above their 200-day moving average too. That's more of a broad-based indicator, but as you can see a clear rundown of the last 4 days of trading. So even though the market remains broad, we remain over the 50% mark, we can see that if you were in the wrong stocks over the last week, guys, you may not have seen many gains at all because broadly speaking, unless we look at certain outperformers like Amazon, Tesla, Google was up there too. Meta was having a good time. There's a lot of other tech names that have just not been performing too well. Healthcare names have just not been performing too well at all. And other than today, a lot of these consumer defensive names as well just have not been performing too well at all. So really at this point in time, still somewhat of a stock picker's market. But overall, guys, the indexes do not look bad. So before we get into more technical analysis, guys, let us quickly review the CPI numbers, and then we'll dive into the technical analysis, shall we? So in terms of the CPI numbers this morning, we were expecting a 2.6% year-over-year read on the October reading, which is up from the previous month. It came in exactly in line, but it is an uptick from the prior month. Now, as well, we have the core read too, 3.3%. That was in line, but core is still remaining slightly sticky above the Fed's 2.5% longer duration target on core, and the overall inflation rate at 2.6 is staying sticky above the Fed's 2% long-range target for that right away. Now, let's move into the components of the inflation. What is exactly still sticky right now? Well, here we can see consumer prices coming down, but we did the month-over-month uptick. We are still in a very wide downtrend, right, at this point in time. However, it could be a situation like we were running into for the 6 months, pretty much coming into last fall into early spring. That 6-month time period, we saw oscillating numbers in the CPI, and I expect this time around to possibly be somewhat the same. It is somewhat sticky in the mid 2% range and core in the 3% range, but we are still in an overall downtrend, and there's only a few sticky elements of the market that remain. One of them, of course, has to be shelter. Take a look right here. I'll move myself over. Here is your overall inflation number. As you can see, overall inflation excluding shelter is now in a deflationary trend. We've been noticing that with goods inflation. Goods inflation is still well below the Fed's target right now. But what is keeping us slightly high, guys, is these shelter readings, both on in terms of home prices or owners equivalent rent prices as well. Prices of apartments, if you're renting apartments, condos, houses, the rent prices are still high, and it ties into also the prices of housing being high as well. We are seeing a more sturdy inventory buildup over the past 2 months, but nothing significant enough to really bring the real estate market down considerably and bring the price of rents down as well, right? For those, you really need to start seeing an oversupply of either, renting, an oversupply of properties for rent, or an oversupply of properties for sale as well. And although we have seen an uptick in the last 2 months of inventory on the markets, it hasn't been considerable enough for people to really start dropping their prices. So we'll keep a close eye on this in the months to follow, but this should continuously come down over time, but maybe a slow grind down. And I think that's the moral of the story right now for inflation, right? Is that it's a slow grind down. We're not seeing the leaps and bounds of progress that we saw late 22 into 2023, but we are seeing a gradual grind down. So for the time being, guys, I still do maintain that is fairly healthy. Here are some of the cost of groceries and food away from home. As we can see, food away from home, guys, 1.1% on an annualized basis. That is very good. That is well below the 2% target. So I know the prices of groceries have not come down that much, but at least they are not exponentially moving higher, right? wages are getting better and better and are outpacing the price of groceries. So at least that's a positive. We are regaining purchasing power in relation to against groceries. Food away from home as well, somewhat sticky, still at about a 3.9% annualized rate, but you can see the downtrend is significant. It's just a little bit of a grind lower at this point, right? So where does the market stand in terms of these inflation readings? Knowing that it uptick, is this enough to keep the Fed at the current rate cycle, or will they need to possibly pause, right? We'll take a look here at your market expectations for the December meeting cut. 82% probability of another 0.25% cut. Leading into today's CPI meeting, the probabilities were only at 60%. But now, even with this number that came in, above last month's estimates, as we can see from September to October jump, even with that, guys, it is not enough for the market to believe that inflation is sticky enough to warrant the Fed stopping the rate cut cycle. Now you can see the probabilities have increased from 58.7% yesterday all the way up to 82%. So the market firmly believing that the Fed will maintain its course of bringing interest rates down, despite the fact that we are experiencing a little bit more sticky inflation than we would like. So we'll keep a very close watch on inflation readings as they come out. But as of right now, guys, I was fairly pleased with the report. We don't see any major red flags. As I said, the best way to sum it up is it's a slow grind down, and the Federal Reserve hinted at this as well. It could be a bumpy path down to 2%, but we are still heading in the right direction without any major red flags coming up in the last few months. So that's my take on inflation. Hopefully you appreciated that. Now let's dive right into the technical analysis, and you will see, guys, that really not much has changed, right? We've been monitoring this trend line very closely in terms of the weekly expansion of the SPY. We've obviously had a very big move up since the elections were released on last Tuesday into Wednesday morning, and now we've kind of been consolidating sideways for roughly the last 4 days of trade, knowing that we have that overhead resistance of that trend line. So in the event that the SPY continues losing a little bit of ground here, we do have somewhat of an hourly downtrend in motion. The bulls have been trying to reverse this as best as they can. They just can't get much lift as of right now. However, the rotation is still healthy right now, and I do believe that to see some very big downswings on the SPY, you will need to see all of your major sectors dropping at the same time. But as long as XLF or XLV is holding up while QQQ is consolidating, or even within QQQ, right? If semis are taking a little bit of a breather, but most of your big tech names are higher, that's going to help keep the QQQ up. So the only time you'll really see some big downside on the SPY and some big downside on the Qs is if everything is kind of hitting the lows at the same time. So pay special attention to that rotation in the markets, right? Still right now expecting a higher low. Anything at this point above 568, looking for that daily higher low for possible further trend continuation. So even a bit more daily consolidation, guys, is not the worst thing in the world. Who controls the time frames here? Well, the bulls. The bulls are in complete control of this weekly as well. So even if we were to dive into, let's say, a bit more daily downtrend over the next 2 weeks of time, well, just keep in mind, guys, there's so much space on the weekly as well. Anything still above that 568, just looking for a weekly higher low for possible further trend continuation. So the bulls are working with tons of space. The rotation still looks healthy at a first glance, but it's really the risk on trade that is kind of coming into a little bit of profit taking right now. Moving into the QQQ. So the QQQs as well, down about 0.13%. No surprise there. It's pretty much all semiconductors. You can see SMH is down 1.68, but for the most part, big tech was kind of holding its own today, except for Google and Meta, which were slightly down. NVIDIA as well there as well, too. Now, QQQ's same analysis as the SPY, just looking for a daily higher low for possible further trend continuation. So if the bears continue their push, we haven't really lost any major levels. That's what's important to me, right? But in the event we do lose those hourly levels, well, the analysis remains the same, guys. We are still hunting for the daily higher lows. Anything above 483, daily higher low for possible further trend continuation, the good old breakout, retest, and possibly run. So be looking for a retest maybe of the 504, which is the 12 EMA, all the way down to roughly 500, 495 is the extent of the drawdown that might be possible. Who's in control of the longer time frames here? Well, obviously the bulls, right? Tons of space to work with here on the weekly, and any weekly drawdowns will just probably be met with a weekly higher low for possible further trend continuation, especially if we don't get any bad macroeconomic data. If the market continues pivoting to the risk on narrative, that could be good for the markets. But I'll remind you, one thing that's kind of holding us back here as well is the rapid rise in the 10 and 20-year yields, right? It's very tough for the market to continuously push to the upside, especially the IWM and the risk on assets. In my opinion, the market has been doing a fantastic job of pushing higher and holding up gains in spite of the fact that the 20-year yields and the 10-year yields are high, right? When these are high, it means that financial conditions are still somewhat restrictive. So if anything, the IWM and certain portions of the QQQ are really bucking the trend. You would not expect this in this current environment of rates going up. Usually when you see a very rapid rise in the 10-year yields and 20-year yields, usually you do not see the market pivot to risk on. Now, obviously, the election was one of the catalysts to move to the risk on trade, but there's a very, it's very paradoxical right now what's happening in the market. So we'll keep an eye on this very complex rotation that's happening right now, but the QQQs are looking fairly healthy. Now, moving into financials. So financials, nothing much to see here as well, right? Beautiful daily uptrend by the bulls right now, but failing to push to the new all-time highs for now 3 days in a row. So in the event we consolidate, guys, daily higher lows are here, 48.67, just maybe looking for a daily higher low for further trend continuation. Now, in the event the financials lose this big move higher and flush below 48.67, well, we could just be expecting a little bit of a daily downtrend into possible weekly consolidation. The bulls have tons of space to afford that. They have full control of the weekly timeframes right now, and we just be looking for a higher low, anything above 46 for that weekly higher low, right? So I do believe that any big drawdowns in financials could be a great opportunity to pick up some of your favorite companies. One of the ones that I continuously am closely monitoring right now is BRK. BRK pulling off, they're trying to pull off right now the good old breakout retest. We're now above the range of resistance that we've been watching, and they're really trying to hold it together. So we'll see if they can do it, right? But I wouldn't be surprised if XLF loses these levels in a big fashion. It's going to be tough for Berkshire to really do it on their own and really, go against their whole sector as a whole. So that being said, guys, the bulls do remain in full control. We can see some expansion, but do not be surprised as well if we consolidate. Understand what we are going for here. The bulls are in full control of these weekly time frames. Now, moving on to healthcare. So healthcare continues to be one of the weakest sectors out there, as well as SMH, especially in the last week of trading, right? This is where most of your pain has come in the markets, and what is preventing the SPY from really accelerating and gaining the levels to the upside. Now, XLV is a very large component in the SPY, so we need to pay special attention to it. They had the daily uptrend going, and they were trying to break through this resistance up here, 151 to 150, couldn't get it done, and now we have the full engulfing move to the downside. So at this point in time, guys, the flush of the lows, 146, is highly likely. If they don't get it done in one shot, they can make the two-step attempt at it, set up the daily downtrend, and start dropping the levels once again, right? Healthcare known to be one of the more defensive sectors, so it really started rallying back here when we had concerns in the overall economy, concerns in the overall jobs market. This trade usually responds very well to a recession narrative. A lot of traders and institutions pivot to healthcare as a more defensive play. But then when you have, rotation back into tech, rotation back into risk on, healthcare kind of just gets left behind in the mix. That being said, weekly downtrend is still well in motion. Lower high is planted in that resistance. And if we do see the lower lows, guys, this is going to be something that healthcare has not done in approximately the last 12 months of time. They have not broken the 50 EMA, which is this pink line right there. Break of the 50 EMA, guys, would be significant for this sector. I'll remind you as well, we're not even close to daily oversold, so the bears can have a significant move to the downside. Now, keep in mind, we're watching for the monthly higher lows as well, and we have not broken this 12 EMA much since the rally of last December. Still a lot of space, though, anything above 138, looking for the higher lows for further trend continuation. But if I had to say one thing, guys, it's going to be hard for the SPY to push higher, guys, especially if financials goes into weekly consolidation, healthcare continues its weekly downtrend. All that's left there is the QQQs, and the QQQs can't hold it up forever. They've been rallying very nicely, but they can't hold it up forever. So far down, it's just big tech. Semiconductors not cooperating in QQQ. So, the push for the SPY needs to come somewhere. If you do see QQQ fall off, the big tech names fall off, semiconductors continue to be weak, XLF and XLV continue to be weak and push down, we'll expect a decent move down on the SPY. And that's what I'm looking for, guys. So in my opinion, XLV and SMH really hold the key right now to interpreting whether or not the SPY continues with a big move down into 585, 580, or whether or not we're able to hold the levels. You need to see a very quick reversal in XLV and a quick reversal in SMH as well, since those are currently your lead bears in the market XLV over the last month of trading, 2 months of trading, and SMH just recently over the last week of trading, right? With all those export restriction headlines hitting hitting TSMC, and other companies such as Intel and AMD as well. Now, moving on to the risk-on sector, guys. So risk-on, IWM Russell, pulling back in a hard way, which is why I was telling you guys on Monday, right? Be very, very, very cautious buying the extremely bullish all-time high breakouts on these indexes, guys. Sometimes it's not worth it, not the types of trades I look for. I would rather wait for a pullback before entering in these. And now we are getting offered the possible opportunity to participate in the risk-on sector. So the pullback area is going to be 232 down to 225. Take a look at this, guys. It's looking very good, right? Who's in control here? Well, the daily bulls are in full control, looking for a daily higher low. Anything above 217 will be that daily higher low for possible further trend continuation. On the weekly as well, looking good. This big area, guys, that we're looking into acted as resistance for the last 2-3 months and was a very big area of resistance in 2020 and 2021 all the way back here. So it stands to argue that now it is going to be fairly good support, and it's going to be tough for the bears to really blast through this without some significantly bad macro data that could send us back into the recession narrative, right? So we still are risk on, guys, but as with all good things, eventually the blast offs to the top do end. Keep in mind, since the election, guys, I mean, this index is up over 11%. So a little bit of a pullback was to be expected in this context. Now, once again, keeping an eye on the pullback as they come down here. I will be interested 232 down to 225 to possibly build a little bit of leap call position in this, because I do still think that there's a lot of meat left on this bone, right? Weekly uptrend is healthy right now, looking for the weekly higher low for possible further trend continuation. So I will be sitting in here, guys. And that goes as well with all the stocks that kind of get bunched up into the IWM, right? You can just think of stocks like, stocks that are, more risk on, right? The ones that either follow Bitcoin or the ones that are independently within the Russell. A lot of the small cap names have ran huge over the last week and a half. So now, bit of a pullback. So if you're eyeing some of those stocks and you felt that you missed the rally, now might be a time to build a decent shopping list. I personally am going to be interested in IWM and ARKK just because it prevents me from having to choose which one of the small cap companies I think will run the most. I just get the index and participate with the index as a whole. Now, moving on to further, the Dow Jones. So the Dow Jones today held on better than most, but as with the rest of the markets, pulled back heavy at the end of the day. Take a look here. The Dow Jones opened very nicely in the morning, but now kind of retracing and giving it back. So in the event we find continuation on the hourly downtrend and we break the lows of this same Tuesday, we'll keep an eye out, guys. We're going for daily consolidation right away. If I had to bet on it, guys, I'd pretty much say that daily consolidation is most likely already underway for the Dow Jones. Could expect a little bit more downside. Where could we possibly end up? Well, these guys right here would be a good bet. 43,300 would be the mark, looking for a daily higher low. Anything above 41.7 is just looking for that daily higher low. The bulls are still in full control. Resistance could be support, and you have the 12 and the 26 moving average slightly below that. So wouldn't be opposed to more consolidation on the Dow Jones. They have control of the weekly time frame in full right now. Beautiful uptrend, just looking for the weekly higher lows for possible further trend continuation. So this is the pullback after the rally, which is why I was saying try not to buy the blow off top breakouts with all the volume, all the hype. Try to wait for the pullbacks and be patient and play those pullbacks adequately and patiently, right? So now moving on to different sectors. We already touched upon the yields, but the yields are just not giving up as of yet just now, right? In one of these articles, I don't want to spend too much time, but in one of these articles with the inflation, I mean, a few analysts were saying that they do expect that the 10 and 20-year yields can stay elevated, guys, for at least the next 2 to 3 months. It's very, very, very likely that that continues. There's a lot of baked in fears that are going to take a while to get over. Obviously, one of them is the reflation trade with Trump's tariffs. Is that going to cause inflation or not? Which is why there's a lot of speculation in the longer term yields as to the Federal Reserve maybe having to maintain rates at the midpoint in next year, pausing the rate cuts in the event that inflation comes back to the upside. So traders continue to speculate on the 10 and 20-year yields to kind of stick around the 4.5, 4.75 range, and that's just where they've been sticky at. Also, you have concerns around the US debt and how that's going to be brought down or not. So obviously that's going to have an impact as well, because if there's no demand for the 10 and 20 year yields, if they expect them to be able to get even higher yields, well, then they're not going to buy them right now, right? Also, the Federal Reserve is not doing any quantitative easing right now. They're still offloading the balance sheet. So the Fed is not going to back up they're not going to back up the 10 and 20 year 10 and 20 year yield trade as well. So it's, you don't have a lot of bullish catalysts to point to the fact that the 10 and 20 can come down in a significant fashion very, very rapidly. If you're expecting a very rapid decrease in yields, you're essentially expecting very bad macro data and the recessionary narrative to come back into play. That's the only time that these yields are going to start crashing down. But for now, while the economy is still good and we're worried about a growth cycle and reinflation because of the Trump tariffs, or whether it's just sticky inflation coming back overall, it's just very, very speculative trade. I'll remind you, the 10 and 20 year yields only move off of pure supply and demand in the open market for these 10 and 20 year yield bonds. And there's a lot of opportunity cost of being in bonds right now. One of them being equities. Equities is having one of their best weeks in recent memory. They've had one of the best years out of the last 5-10 years as well. So the opportunity cost of sitting in bonds is very high right now. You're forfeiting all of these equity gains. So as long as there's no demand for these bonds, guys, do not expect the TLT to start rocketing in a very rapid fashion. That's just the fact of the matter. So I'm not opposed to building a TLT position, but also don't be surprised if this one kind of stays muted at the lows for, maybe the next 1, 2, 3 months. The only determining factor will be if you get big recessionary data, that's when you'll see the massive upswings on TLT, because there'll be a repositioning into bonds as a defensive structure. So hopefully that makes sense. Now moving into gold, we haven't touched upon gold for a while. This one as well, right? This one had rallied a ton and had a lot of people asking me whether or not it was a good proposition to be buying gold all the way up here. Well, I'll remind you guys, when in doubt, just zoom out. Gold has been on a monster 8-9 month rally without much monthly pullback as well. We also hinted at the fact that gold clipped on the monthly time frame 83 RSI, and the last time it did that in August of 2020, we also saw a significant pullback of a few months in a row. Every single time gold cracks above 83, it does not stay there on the monthly time frame forever. Every single time it does it usually has a very sharp pullback. This is different for all assets. If you pull up a chart like NVIDIA, you just look at the historical RSI, you notice it can stay overbought on the monthly for a lot of time. But gold is not that same type of asset. When gold gets overbought on the monthly timeframes, usually you do see a little bit of a pullback. And I'll remind you, gold is a little bit of it serves two purposes. Number one, it can serve as an inflation hedge, but also it serves as an uncertainty hedge as well. And it's no secret that since the day of the election last week, the gold chart has kind of fallen off a cliff. Why? Because you've removed a lot of uncertainty catalysts in the market. So gold traders just now running away with it to the downside. The next big area of support for gold, I'll remind you, is all the way down here at the 26, 25, 32. And then we quickly fall into the actual area of support because we didn't really set much on the way up, right? Just these small little levels right here. The bigger one, of course, is down here at about 24.56. A lot of trading left, but suffice to say, we have lost the entire daily uptrend. And I would be quite cautious entering this trade before you maybe find somewhat of a weekly local bottom, until we find a local bottom on this daily time frame and you start seeing some daily time frame shifts. That's why I'm staying away from gold from now. So oil as well. Oil has been significantly muted ever since the election results over the course of last week. We had a big rally up, and that was supposed to be the Trump trade, and now the Trump trade has since unwound. I'll remind you, we looked at this about 2-3 weeks ago, and they were saying that there was now a global oversupply of oil. Also, Middle Eastern tensions have been coming down too. So that does not help the oil trade. And number 3, oil usually in the fall is seasonally weak. Wrapping up of the agricultural season, wrapping up of travel season for most people as well. So all of that combined leads to a lesser demand for oil, which leads it into its weakest seasonal pattern of the entire year. Usually this picks up back in the months of January and February, but for now we remain muted at roughly the levels of the last 2 years worth of low supports. So we'll keep an eye on oil, but still this trade is one that's going to be out of favor, which is why I'm not particularly enthusiastic about playing any oil stocks right now. I think that we have a lot of time before these oil stocks really start to run, and that's why, guys, I'm playing the other aspects of the market that are hot right now and kind of just leaving oil on the back burner for when I believe it's ready, most likely coming up at the end of December. Now, Moving into Bitcoin, so Bitcoin as well, hitting a $93,000 top, looking very good, all-time highs, of course, but the bulls may be appearing to get a little bit tired, right? Very overbought on the RSI, but we know that Bitcoin can go on these historical RSI runs and stay overbought for quite some time. So the RSI alone is not sufficient for our analysis. On the weekly time frame as well, not overbought RSI just yet. So this weekly is looking good. You know, the daily is overbought, but the weekly is not, which leads us to believe that it may look like a temporary top on Bitcoin, but they could just as well, guys, reverse this overnight and send us more towards 95, 96, even $100,000. So the time frame that I'm looking at more closely is going to be the weekly and how we close these weekly candles. Obviously, if by Sunday we give back a lot of this weekly move, then weekly consolidation is possibly likely after such a big move on Bitcoin. The daily is not looking too bad at all. Just keep an eye on the short-term time frames. Big engulfing move on the hourly, but Bitcoin is no stranger to big engulfing moves and losing this. But just sometimes it can simply just continue against anybody's expectations. So I wouldn't say that I'm buying Bitcoin over here. However, I'm watching for a pullback. If you do pull back 84, 83, or the low 80,000s, that'll be the area that I might be looking to load up on some leap call contracts, because I do believe that Bitcoin is poised over the course of maybe the next 6 to 9 months to really reach my price target of about 120,000. There isn't that much FOMO. I know that right now we're in a bit of an echo chamber because you guys all look at Bitcoin every single day, but some of my friends who are not in the market, they still really haven't talked to me about Bitcoin that much, at least not as much as it was back in 2021, right? We are at all-time highs on Bitcoin, but you guys probably also have seen this, right? There's not that much FOMO in the markets right now for crypto. If you are in crypto, you can see it because you're in an echo chamber. But outside of the echo chamber, I'm not noticing nearly close the amount of FOMO and media coverage that we saw on similar all-time high breakouts all throughout 2021, this cycle right here. So I do still believe that there's a lot of meat left on the bone in Bitcoin, but I'm not trying to buy up here. I'm still looking for my daily consolidation to write short puts well below the market using the ITX as a proxy, and also to play some potential leap calls for any weekly pullback, guys, for that eventual continuation. I think there's a lot of meat left on the bone on this trade, provided that the risk on trade remains popular and prevalent, and we don't get bad economic data, which brings back the recession narrative, which would kind of bring a lot of the enthusiasm out of that risk on trade as quickly as it most recently entered. Now, Ethereum as well, displaying the same characteristics. Ridiculous rally by Ethereum, right? So it's very normal that, you know, after a 45% run, you do have some pullback. Now, I know it's crypto and it can run even more, but it does really appear as right now we are heading into a bit of daily consolidation. So in the event we come out with the breakout retest, where are we looking for, guys? Well, 3,000 down to about 2,800 would be probably the area of a likely pullback for the bulls. The weekly would support that thesis too. Weekly uptrend, looking for a weekly higher low for further trend continuation. All of the support is down here, guys. So I will be patiently waiting for Ethereum in the event we come back down into those levels. Quite a simple analysis. I'm not saying we're necessarily going to get there. It could just reverse by tomorrow. I'm just saying that if it does come down there, I will be seeking to add to a little bit of my Ethereum positions, because now the bulls have really solidified their weekly control. And look, we do have the weekly MACD pointing up after roughly 6, 7, 8 months of consolidation, right? So not looking too bad on crypto. But as I said, guys, be very, very cautious now. It's been on a tremendous rally. I would not be surprised if we're due for more than just a few hours of pullback, maybe into a few days of pullback. Just healthy pullback, in my opinion. Now let's get into the good stuff. Let's get into some stocks, shall we? And number one, we're going to be looking at Apple. So Apple up about 0.4%. Not looking too bad there at all. So Apple's still trapped between two levels. We know the context is a daily downtrend. The bulls are looking to reverse this, but this would only happen if they break 228.82 with a very bullish daily candle close. Still battling with the overhead resistance 230 to 224, which is why I say the daily is not the cleanest time frame. The weekly is really where all of it is at, right? We are trapped in this tightening range. And for all intents and purposes, if you remove the Black Friday candle, we've been trapped in this range of accumulation now, guys, since the month of July, right? No new all-time high breaks and no significant breaks and closes below 215. So if I'm looking to play this for a swing trade, I'm probably going to be looking to play some short puts, right? As soon as we come down towards the lower end of support, we can write short puts down here. And if we get a sign, we'll rally them higher and probably write covered calls in this area. Just playing the range bound scenario for Apple right now. No significant price action changes. We'll keep a close eye on that. I would just be very cautious if you get a big daily candle close down here, 219. It will open up some short put opportunities, 214 down to 210, but be slightly cautious if you approach this area with some hard momentum, right? If you get that break and close on the weekly below here, especially below 214, well, then you'll have lost the entire weekly uptrending pattern. It'll be a weekly downtrend potentially in motion, and we'll be heading into more monthly consolidation, the extent of which maybe 208 down to about 200. That would be a very logical area, right? Just looking at this monthly chart, would it look bad if Apple just did something like this and then rally? Probably not, right? So that's kind of what I'm looking into in the event that we get more consolidation on the indexes and Apple gets brought down in the mix. Now, AMD down another 3%, definitely not helped by the fact that they did say that they were laying off around 1,000 jobs. Now, they said it was to reallocate, some capital away from certain segments of the business and focus on the growth aspects of the business, which is data centers. But still, when the whole sector is down today and AMD releases layoff news, it's probably not going to be received the best, right? If the company is growing so well and stands to really benefit from its data center ramp, why is it laying off people as a whole and not just reallocating those people, right? Talking about this EPS expansion in 2025, talking about this revenue expansion in 2025 as well. If it's so good, why are they laying off people and not just reallocating them to different positions? I think that's how the market is interpreting this news, right? So all in all, unfortunately now, guys, daily downtrend resumes for AMD. They had a chance at getting this back, but I was telling you guys, when you have such a big move down, it's crucial to measure the size of the bounce before losing the hourly trend, right? We had the hourly uptrend going, and I was saying, when we lose it, you know that your daily bounce is finished. Then you measure the size of the bounce. And I was saying on the Monday session, the size of this bounce is not the best, 38.2%. So the likelihood of a revisit of the lows is very probable, and even a break of the lows is probable as well. A higher bounce would have given the bulls the best chance of resetting into a daily, but now the bears have capitalized on the move, so daily downtrend resumes for AMD. And as well, guys, unfortunately now we are giving back way too much on this weekly time frame as well, right? Same analysis applies. If the bulls had a good rally and are now giving back 80% of the move, do you guys think that it's very likely that the bulls are able to completely V-shape this? Probably not, right? The best chance that they have is either maintaining somewhat of a tightening range between our two levels, 162 to 155, and down here, 141, 125. Need to maintain somewhat of a tightening range, or best case scenario, if they want to recapture the weekly, probably not going to do it with a V-shape, probably going to do it in a two-step weekly recovery process, which does take some time. Now, I'm not opposed to playing AMD down here, but the one way that I do want to play it is by playing short puts. At this point in time, anything below 130 down about 125 could be a decent location for some short puts. But I mean, if AMD is open, several other names that I favor better than AMD are open as well. TSM being one of them down in this location right here could be looking very juicy for a little bit of a pullback, right? So TSM, I think, is a much more solid name than AMD. And as you can see, we are going for somewhat of a longer duration consolidation after their earnings, right? But it's not their faults, guys. It's the entire semiconductor industry. And I've been talking about this now for weeks and weeks and weeks on end. You take a look at the 1 month relative performance on the semiconductor industry. What names are actually up here? Only NVIDIA, TXN a little bit after their earnings, and Intel, surprisingly Intel, but every single other name is down here. So the whole sector is basically lagging behind the performance of the QQQs. So in this case in time, when we have a sector that's entirely lagging, I like to consolidate most of my plays, if I'm going to play that sector, into the highest quality names of that sector. And for me, those are just three names: TSM, AVGO, and NVIDIA. So when I see drops on those three names, I would rather play those than play the other ones that are least favor of the bunch, such as AMD. So hopefully that makes sense. Moving into Amazon right now. Amazon with a stellar day today, 2.48% to the upside, and cracking through brand new all-time high for Amazon. We were saying that the bulls were very strong here, breaking out of this $200 psychological resistance. And I was saying, when they break this 200, guys, most likely we're going to head to 220 very, very quickly. And that's exactly what's happening right now. Daily uptrend is clear as day right now. Higher lows are set and looking for the higher highs. So your resistance levels are going to be round numbers, right? 220, 230, essentially. Right now, the bulls are in full control. If you do see pullback here, they do have a little bit of space. Anything above 205, looking for a daily higher low for further trend continuation. However, if you lose the daily uptrend over the next few days, just understand what the bulls are looking for. We would just be looking for a weekly higher low for possible further trend continuation. So if you're looking for a re-entry around 200, you'll probably only get it if the SPY and QQQs head into big weekly consolidation and drag Amazon down with it. If that happens, put this one on the back burner, put it on a watch list. If you find the 200 back to about 195, could be a very beautiful, right, breakout, retest, and run trade on a weekly time frame. So that's the analysis for Amazon. So far, looking very good. Not really overbought just yet. Barely fractionally overbought on the daily time frame. And on the weekly as well, right? Fractionally overbought, not that much. You know, Amazon can stay overbought for several weekly periods at a time, up to like, you know, over a month sometimes Amazon can stay overbought on the weekly. So right now, just embarking on its all-time high breakout rally, looking very good. Moving into Google right now. So Google struggling a little bit here, 1.54%, but really inside most of the trading range of the last 4 or 5 days. Now, the bulls still do have control right there. I wouldn't say that the daily higher lows are set just here, just yet, because we never really, it's very, very choppy price action, right? So even though we lost the hourly time frame today, this is pretty much the same daily consolidation. I would argue that this is still just one single move, right? In the event we pull back, well, we're just looking for a daily higher low, anything above 170, looking for that daily higher low for possible trend continuation. So this is also approaching one of the infamous trades that I like taking a lot, the good old breakout retest. We broke out of the whole 175 to 170 location with a big break after those election results, right? And now we have the chance of possibly retesting them in terms of weekly support. Look at the weekly MACD, looking very good, right? And I do think this one is heading towards its Amazon breakout of the all-time high moments. If we get maybe one more week of consolidation bringing us down into here, could be a last opportunity to pick up Google at an attractive price before they maybe go on their own all-time high breakout routine. So looking very good. I will be looking to shop for Google down here, short puts, or adding to my Leap call contracts for exactly what I just said, right? The weekly breakout, retest, and possibly run trade looking very good. The MACD cross is very juicy. And I'll remind you, most of all the analysts' price targets for the next 6 to 12 months are all above the current price, the median being, or the average rather, being about 210. Moving into Meta right now, Meta down about 0.82%, but Meta really hasn't been doing much at all in the last month of trading, right? Very, very choppy price action on the daily. You can argue that they're trying to set up for the daily higher low for the trend change, but it's not looking very clean, right? In terms of my opinion, the cleanest time frame for Meta is the weekly. This is somewhat of a weekly bull flag. We did the same thing back here, right? Nice move up, bull flag into next leg up. Now, are we currently doing the same thing of nice move up, bull flag, and possibly move? That is highly likely in my opinion, especially if the markets stay bullish. Now, in the event the markets stay bearish or markets go bearish and we roll over the daily, we roll over the weekly time frame as well and continue consolidation, I do believe this location right here is a very juicy one, 545 down to about 530. I'll be sitting there to play some appreciation on Meta. In the event we do come down there, it's the good old breakout retest trade, and we'll be retesting the larger area of resistance that we just broke out of, and that will be looking for a monthly higher low for possible further trend continuation into 2025. So if I do take this positions, especially with some options, I'll be putting at least 3-4 months of time, guys, to let the consolidation play out and then give Meta some time to really start regaining the levels, right? We know they can move fast when they do move, but we also know sometimes when they consolidate, it takes a while for them to really get a breakout going in the future, right? So could be something like this. And that's why I put a lot more time on the contracts. Moving into Microsoft right now. So Microsoft was looking very good for a majority of the day. And then unfortunately, when 2 p.m. rolled around and the entire market started selling off, they kind of sold off as well. But beautiful engulfing move on the hourly time frame right now. The only thing is that we're running into this infamous area of resistance, right? 434 down to about 423. Encountering this resistance every single time we try to push into it, guys. Here, a little bit here as well, even though we broke out of the top, right? Here. It's been a very challenging area for the bulls all year. So we'll be looking if they can kind of make this movement into the end of the week and close a nice weekly green candle in this location with a nice daily uptrend. They are looking for the daily uptrend, but keep in mind, any loss of 415 will just once again plunge us back into downtrending territory and once again keep us in the context of this tightening range, which is why I want to see a bullish green candle into the end of this week so that next week we may be flirting with the breakout of the 435. As of right now, that's just wishful thinking. The technical analysis doesn't point to that. We need to see several more bullish green candle closes on the daily timeframes to really get that daily uptrend lifting and also really get some lift on this weekly time frame as well. A weekly close above 439 would be looking very good, guys, for the eventual breakout of this weekly time frame. So that's what I'm looking for on Microsoft. In the event we continue to come back down lower, guys, 410 or below, short puts for me, I'll be looking to write some contracts on these, and also maybe adding to the call debit spreads or maybe leap call contracts as well. So I really do believe that Microsoft is poised to embark on a run to about $500 in the next, let's say, about 3 to 6 months. So that's the target time frame that I'm looking for on them. Now moving on to Netflix. Netflix up 1.34%. Netflix just cannot be stopped, guys, right? Daily uptrend is clear as day right now, looking extremely gorgeous. Daily timeframes are slightly overbought on the RSI, 77, but I'll remind you, Netflix can stay overbought on the daily at these levels for quite some time. So the move maybe not topped out just yet, but is getting a little bit rich on the higher timeframes. Just keep an eye on your hourly time frame, guys. The hourly is always your guide. If you lose the hourly time frame into an hourly downtrend plus a loss of the 12 EMA that has been our guide since we've broken out after the election day, right? If they lose that, well, then you can obviously understand that daily consolidation is probably underway and should be lasting for more than one single day. If we do find that anything above 749, looking for a daily higher low for possible further trend continuation. No trade for me on Netflix just yet. It's kind of moved a lot further than even I had anticipated. But in the event we somehow retest under 800, let's call it, let's say, 780, there might be a little bit of a swing trade to be had on Netflix there. I do think there are better trades for some trend continuation right now, but Netflix, I mean, I love my long-term shares. I'm not buying more up here. I'm just holding, but I'm also not selling any shares here either. Moving on to NVIDIA right now. So NVIDIA also coming down today, 1.36%, but it's not all that bad, right? A lot of other semiconductors came down a lot more than NVIDIA. I would say that they're holding up fairly well, considering the fact that they do have earnings in roughly 2 weeks' time. So that being said, still looking for the daily higher lows, guys, at this point in time, right? Anything above pretty much 132, looking for the daily higher lows for possible further trend continuation at this point in time. Now, in the event we start breaking down a little bit more, right? We'll also be looking at the same time, since this is one move, still just looking for a weekly higher low, anything above pretty much 131, that same level, still looking for the weekly higher low for possible further trend continuation. Now, it's very possible that NVIDIA stays somewhat muted here, guys, into their earnings. And what I did notice is, notice this declining volume on the weekly, guys. NVIDIA, I mean, they haven't had this low volume since all the way back here in December. So you can obviously see that there's been a net rotation over the last roughly 2 months. NVIDIA's moved up on lower and lower and lower volume, but you can see there's been a net rotation out of the semiconductor trade and possibly in other things. Semiconductor volume as a whole has been quite low, especially in comparison with what it was all throughout the year when the AI narrative was the only narrative that people were paying attention to, right? So that being said, in the event that we do find further NVIDIA consolidation, I'm still very bullish on the stock, and we'll be looking to write some short puts. 130 down to about 125 is going to be the desired target, at least over the next 2 weeks until we come into that earnings cycle. Now, moving into Tesla also kind of consolidating today, even though they had a nice green day, 0.53%, still looks like a big consolidation candle. And that's completely normal, guys. Every single one of the stocks that has moved a ton in the last few weeks, right? Tesla, everything except for Palantir. Even Palantir today, had a glorious day, starting to consolidate, right? The first kind of red candle close on Palantir, even though they were higher on the day, but a lot of other names that people have just been riding a lot higher, right? SOFI coming down a little bit too. So we'll cover these in a little bit when I'm done with the Tesla analysis and just go over them. So a lot of the risk on trades, or a lot of the hype trades, right? They've kind of been letting a little bit of air out right now, which is perfectly fine and perfectly normal. Still just looking for a daily higher low. Anything above 238, looking for that daily higher low for possible further trend continuation. On the weekly, also not looking too bad. The weekly bulls have tons of space here, guys, right? Anything at this point above, same, 239, looking for a weekly higher low for further trend continuation. I'll remind you, the closest area now we have is the 310 down to about 300, right? It's actually 312 down to 295, but you guys get the point, right? This whole area that the bulls have come into a couple times in the past could be your first likely area where the bulls can find some support into. So I will be looking, in the event we come down into this area with momentum, I might be looking to write some short puts, 280 down to 265, because the volatility is so good. I'm not expecting it to come down back here unless the SPY and the QQQ really fall off a cliff. That's why if we come down here hard, you may find some good premium, 280 to 265, and I would not mind being assigned there, considering the amount of space we have on the weekly. If we get filled down there, probably going to be a likely, retracement back to the upside, even if we do get stuck thereafter between these levels. So that's why I like this trade down there for some short puts, but not so much playing the upside continuation for Tesla just yet. I want to see a little bit more consolidation. Moving on to Palantir right now. So Palantir as well, up 1.42%, but you can see, right? Little bit of a give back intraday. Palantir was up tremendously over the course of the morning, and now we have a somewhat engulfing move, but that's happened before on Palantir, and the bulls have been able to recapture almost immediately, right? Let me put it on the regular time frame so you can see that better, right? Hourly downtrend, the bulls maintained the defensive line around the 12, even though they slightly lost it, and then boom, engulfing, right? You really need to see an engulfing move down, lower high, lower low, and flush the 12. Flush the 12 completely, guys. That has been your guide since this whole rally started, last Monday, essentially. So if you lose that in a big way, you know that daily consolidation is underway. And then at that point, you're just looking for a higher low, anything above 40.71, looking for a daily higher low for further trend continuation. Now, if you're keeping an eye on this down the line, in the event you see the daily downtrend breakdown, is that big of a deal, guys? Not at all. Who's in control here? The bulls are in very much control of this weekly time frame. Tons of space above the lows. Anything above 40, going to be looking for a weekly higher low for possible further trend continuation. And I'm waiting for this consolidation, guys, right? We've been waiting for it for a while. So in the event Palantir chooses to consolidate, it may open up some trades with the volatility. Maybe some short puts below 50, wouldn't be opposed to it because there's a lot of volatility in this stock right now. And speaking about volatility, right? So if you just look at a few of the players that I brought up earlier on in the video, you'll see exactly what I mean. Even though Bitcoin was up today, Coinbase coming down in a very big way, right? And it's completely normal since the election, guys. I mean, this stock is up from the day after the election. This stock was up 75% in literally 5 days of trading. That is absolutely massive. Eventually, you have to get a pullback. Now, 10% is a very steep pullback, but nevertheless, look at the weekly levels that we've created, right? There's a lot of support below us now, 264, 260. So even if we drop, I mean, the bulls still do have a great area of defense to pull back into. Same thing with SOFI as well. SOFI has run an absolute ton, guys, an absolute ton. I mean, how much more do you want in a straight line up, right? So SOFI seemingly losing the levels right now, but look at the space, anything above 1073, just looking for a daily higher low for possible further trend continuation. Right here, the first line of defense is 1230, which is pretty much the defense line of the 12 EMA that we have not lost since they started this monster rally early on in the month of October. And even if you do lose the daily, guys, into daily downtrend, right? You know what to expect. Just looking for some weekly consolidation at this point. Look, guys, I mean, on the weekly, it's clear as day, right? Anything at this point above 979, 980, looking for a weekly higher low for further trend continuation. Weekly's been overbought now for a little bit of time. The daily was severely overbought leading into today's trade as well. So very healthy, normal consolidation for these stocks. I will be looking to play them, but I am being slightly cautious and waiting for a bit more pullback on all of these names that have run tremendously. I mean, even a company like Square, which I am in right now, you got to kind of call it as it is, right? Battling with resistance right now. And Square, a lot of these trades, guys, they've been moving very much in line with Bitcoin. Take a look at Square. Even though I like Square just because of its own fundamentals, it's being tied heavily into the price of Bitcoin right now. Here's Bitcoin in pink, right? And you can see how closely they've kind of been tracking together in terms of the daily and weekly moves on Bitcoin. Look at these daily moves on Square, right? Let me just overlay the chart. And you can see, right, ever since September, it's kind of been tracking almost identical fashion. Every drop, every pop is really mirroring Bitcoin at this point. And it's not the first time, right? Square kind of does this, right? This whole section right there, down, right? This whole section right there, down. This right here, down as well. And you can notice, right? It's tracking very well. So even though Square has a whole other business and should not be tied into Bitcoin that much, it gets tied into Bitcoin as well, right? So all these risk on moves, Bitcoin, oddly enough, I would say is a better indication and better tracker than the IWM Russell itself. Bitcoin is really the poster child for the risk on trade. So it stands to argue all these small cap growth stocks, yes, they're tracking the IWM, but a lot of them are even tracking Bitcoin a lot closer. So be mindful of all those stocks right now as they pull back, right? One of the ones that I'm looking for, as I said, is ARKK. If you get a pullback on ARKK, we smash through some big levels right there, guys, right? So, I mean, look at ARKK, right? A lot of the top holdings are Tesla, Tesla and Coinbase, admittedly, but we did crack a very big and brutal weekly level. So it stands to argue that if we do get a pullback, these pullbacks are possibly for buying. I mean, if we're trying to take a position in here for some longer duration contracts, it could be a very nice entry over the next few weeks if you remain bullish on this risk on trade. So just a few ideas, but never doubt, guys, that there's tons of opportunities in the market right now. You may think that everything has ran a ton. I mean, everything has not run a ton so far. Uber is still a very attractive opportunity. We went through their earnings, the very attractive company right now. They're only up year to date about 17%, trailing behind the S&P 500, right? Looking into Airbnb as well. Airbnb right now, I mean, they've done fairly okay this year, but they're down 1.24%. They've rallied off the lows that we've had, but they're still down on a year-over-year basis. And they're at its fairly attractive opportunity. The valuation is still a little bit high at 140. But if we come back down here, mid-120s, I'm all for Airbnb. And I know you guys sometimes don't like value that much, especially in this context, but UPS is a very good value trade if you want to add a value position and kind of take some of the risk off the table, and you're looking for a value play that could possibly run. UPS is looking very, very solid, guys. I bring this up a lot of times. UPS in these levels looking very good. Even one of my favorite real estate companies, Vici, they've come down a lot in the last 2 months of trading, coming into a very nice area of some good support. 30 down to roughly 31 down to roughly 30, looking quite good. And what are we doing? It's the monthly breakout retest and possibly run. It's been coming down with the 10 and 20 year yields, but this kind of won't last forever, right? So that one's not looking too bad either. And even one that I've played more recently, Coca-Cola, a very nice defensive stock right there, looking for the monthly breakout retest and possibly run. Has been daily oversold for, this is the longest period of daily oversold on Coca-Cola that I've seen in years and years and years. Usually you get this oversold and you can see a quick little bounce. Usually it doesn't stay down there for 2 weeks of time, right? Just going back all the way to COVID, even before 2018, you can't really find daily oversold periods that last more than 2 weeks. So this one is also a very good trade. That's why I say, guys, there's tons of opportunities in the market right now. Just because a few names have run 50% in a week, it doesn't mean you've missed the boat on anything, right? If anything, there are tons of opportunities available in the market right now, whether it's big tech, the ones that we go over, some of the ones that I just mentioned, even value names too, or if you're looking for some pullbacks on ARKK to benefit from the growth rally, I mean, these are the pullbacks that you're looking for, right? Which is why I've told everybody to be somewhat patient. Don't have FOMO all the way up here, guys. Trust me, you always get re-entries. So that's pretty much everything in terms of our stock coverage. Now, in terms of the positions that we have, guys, there's a few new ones and there's a few old ones as well. So I'm not going to go over the old ones, just the ones that I've added in the most recent couple of days of trading. So you guys can see that the Amazon 185 calls that we picked up on the Monday, I did show you this trade on the Monday, guys. Already up 13.2%. Now, I'm not going to rest on my laurels and pat myself on the back just yet. If SPY and QQQ come down, we'll probably start round tripping a decent amount of these gains. But so far, they're looking quite good. I'm happy with my original entry 206, but if it pulls down Amazon 200, I'll add some more right there as well. All the rest of the wheel trades, some of them are moving quite well. Disney has earnings tomorrow morning. We're up nicely on these leap calls, up about 115% on these leap calls. I did sell a covered call against it just for the week at the 111, which is roughly just above the expected move. Expected move is 110 to the upside. I wrote the 111s. Now, in the event that I come into the money on those, I wouldn't mind closing those for a little bit of a loss. But in the event I pull back on my leaps with a ton of time on them, at least I'll be able to pocket a little bit of premium right there. I also, if you remember, I sold my Disney shares. If you guys remember, right? I sold them literally today, at the similar levels where we are right now. Roughly on Disney, just about pretty much where we are right now. In the 102s, I sold the shares. I only had 10 shares, guys, but I've been riding them since 85. If Disney gets a little bit of a pullback, then fine. If it continues to rally, I still have the leap contract. I'm happy with the gains on those 10 shares. Super tiny position, guys. So I figured I'd just take some profits off the table and just maybe reallocate it into another opportunity that's maybe a little bit better and a little bit low right now. So moving on further, we do have 2 ELF contracts that I opened today. I mean, I thought I was getting a good deal on ELF when it was down about 4% on the day, and it dropped a lot more, down about 6.37. So I opened them when the stock was already red all the way down here, and it dropped a little bit more. So I'll explain to you the logic. The logic is the 119s for this Friday and the 112s for next Friday. This one is 0.5%, and this one is just under 0.5% for only 2 remaining days of trading. The logic is very, very simple, guys. I'm expecting the good old weekly breakout and retest trade. There's a level right here, 115, that we broke to the upside. The weekly MACD is good. The company just had their earnings last week, and the earnings was very nice. I loved their earnings, not any form of consumer slowdown for ELF's business. So in the event we are going for the good old breakout retest, I want to make an attempt for it. So number one, I'll be entering some shares at 119, fairly good level, fairly good valuation if we get a sign on Friday. And my next DCA comes all the way down here at 112, which is also a similar level to those guys. So we'll see how they play out. Wheel trade, I'm getting a little bit aggressive on the ELFs, but I still like those two levels, so we'll see how they play out. The end phase 63s, we may get assigned on Friday. If we do, the same logic applies. I've told you guys that I believe that the market is overselling these solar stocks a little bit too much, so that's why I'm positioning in them. Now, obviously, timing the bottom on these is quite difficult. All I can rely on is the fact that at 65, the PEG ratio is amazing. The growth rate is amazing for this company, and eventually, with weekly oversold conditions and with daily oversold, deep oversold conditions too, we are possibly expecting a bounce. So I'll just play it for what it is, which is a recovery trade. So I got the 63 puts, entering some shares with the wheeled strategy, and also have the 85 calls for next June, giving myself a lot of wiggle room and a lot of time on those. We still have the Coca-Cola contracts. They're still down a little bit. No problem there. We entered them when Coca-Cola was just under 64 in the mid 63s. Now they're down a little bit. Moving on further, the Microsofts are doing well, and we just got logged out of the brokerage again. I hate when this happens. Give me a second. So continuing on, now in terms of SOXL, I also opened some positions here on SOXL because I think the semiconductor kind of sell-off and weakness is kind of nearing its end right now. So I'm making a play on that. Number one, we have the 27.5 short puts that we opened on the Monday session. We'll see if we get a sign on those on SOXL, but that's really towards the bottom end of the range on SOXL, at least over the last 3 months worth of trade. I know SMH is not anywhere close to the bottom of its range, so we do have a little bit of risk on this trade, guys. But once again, SOXL is a relatively cheap position for me at only $2,700 in capital. So we'll play this one for the volatility. If I get assigned, I will not mind. I'll hold the shares, but that's the way I'm playing it. Now, number two position that we have on SOXL is I'm starting a call position as well, going with the $25 calls in the money, just about 70 delta at the current time. It logged us out again. That's absolutely insane. Anyway, so we went with them at 996. They're up a little bit right now. We'll keep an eye on how this trade lasts. And that's pretty much it, guys. Other than that, we do have the TSM short puts that are also underwater right now for TSM. TSM is coming dangerously close to assigning us on the Friday session, but I do not mind picking up TSM, guys, at 185. I do like the valuation, and you can argue that it is a little bit high right now, but I am just looking for somewhat of a weekly higher low eventually for the weekly uptrend resumption. The maximum drawdown may just be in the mid 170s, but I don't really mind. TSM, if anything, I'll just hold it for the longer duration. I still like the way this stock is moving as a whole. Now, you can argue that, the monthly's not looking the best right now. Still a lot of trade to be had in the month of November, right? Only halfway through. Monthly is still slightly overbought. But once again, if I'm to play semiconductors, I would rather play the strongest semiconductors of the bunch. And for me, that has to be NVIDIA and TSMC. So staying true to my rules in that format. Now, that's pretty much everything for today's video, guys. That's all I had for you. So if you did enjoy today's video, consider dropping a like. Would really appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We'd love to have you back here. We do these every Monday to Friday after the close. And lastly, if you have any questions at all, please feel free to always leave them down below in the comments. If you want a second opinion on a stock, on an options play, anything you want, I'll do my best to provide an opinion without it being financial advice, of course. And in the event that you guys want access to all the trades that I show here on a daily basis, all the earnings plays, all the wheel trades, here's last week. This week, we're having a very good week as well. A lot of our leap contracts are making a ton of money, so quite happy. This is last week. These are all the weeks prior. You can see that we don't have that many losses, but of course, past performance is not indicative of future results. We do a lot of different things. The weekly wheels, shares, call options, long-term leap call options as well, and long-term investments, all my trade ideas and setups, the private morning live streams for about an hour and a half every single morning, and all throughout the day, you guys can ask me specific questions on your stocks and your options, and I will help guide you through your positions. So if that's something that interests you guys, the link to the Discord is always down below in the description, so hopefully I see you in there if it is something that interests you, and if not, well, I guess I'll see you guys back on the channel. I will see you tomorrow after the close. Happy trading and peace.